Okay, everyone. So today's our lecture 9. So today we are talking about auditing the purchase and also auditing inventory. Hopefully we could get enough time to cover those two areas. So in our class, a lot of you do have work experience. So if you do have the work experience, I think those two parts might not be hard for you. But if you don't, sometimes you should first link them to the real business cycle of purchase, sales, inventory management itself, and then further think about auditing. Okay, and when we are doing the presentation, when we are doing the lecture, so if you have any question, if you think any part is not clear, feel free to stop me and raise your questions. So first, so before we get to the real topic, as we have already covered the overview of test control, overview of substantive test, and also cover the sales cycle. So can you just recall, when we auditing any area, what are the Euro routes we need to follow? What are the Euro steps we usually follow in auditing any of the areas? So basically, as you have done in your assignments, understanding the entity is very important. So when you're understanding the entity, so in particular, in relation to the cycles, the purchase, sales, or different auditing areas, you should understand the business, understanding how do they operate in this cycle. So what are the key procedures? What are the key documents? What are the key controls? And of course, by doing that, by analyzing that, you should also identify what are the key accounts and key assertions at risk. And actually, because today, all of us have finished the presentations, so you can actually record what you have done in your assignments. So a lot of you have done pretty excellent analysis to the business. And have you also extend your analysis to auditing to identify the key accounts, key areas, key assertions at risk or not, which is very, very important for this unit, I think. So after understanding the business, understanding the cycle, then the next procedure you should do is to assess and to do the risk assessment and also to decide the audit strategy. So so probably in the sales cycle, for example, you think, all right, so for existence, for occurrence assertion, that's a assertion of risk, and the inherent risk at this area would be very high, but the company do have a very good control. So overall, you think the overall risk of material misstatement is at medium level. So based on your assessment to the risk, you can decide your audit strategy in this area. So in terms of audit strategy, even though we do give them two names, one is the lower access control risk approach, the other one is the predominantly substantive approach. However, in practice, what we really do is to decide whether or not we are going to rely on the company's internal control and how much we are going to rely on the company's internal control, right? So once you have decided your audit strategy, likely you are going to design your audit test in the area. So when you are designing the audit test, what we are going to do, no, not on this page. So what we are going to do is to design the test of controls and then substantive audit approach, right? Substantive tests. So for test control and also substantive tests on transactions, we can actually do them together as a dual purpose test. And also for substantive test on account balances in terms of the assertions like existence, completeness, valuation, etc. To the account balances. So in different accounts, there might be different specific tests you have to follow in accordance with the current auditing standards. Any question? All right, so basically, so if you can still record what you get from the previous 8 lectures, so if, suppose you have a lot of companies to audit, so for most of the companies with similar size, with similar operations in the same industry, if they do not have any special or extra risk, then it's very likely you can follow some pre-designed audit test. So for auditors, what to do is, of course, for together with the auditing the software and also your working paper, so year after year, we have accumulated a lot of standardized checklists for us to do, right? So those are very much standardized for all the companies in the similar size, in the similar industry. And then for the auditors, if you want to contribute further to your engagement, then you should be able to identify what has been special in your clients compared to their peers in the same industry, in the same area. So you could identify, you could pick up some extra risks you should further focus on. And for those extra risks, then you usually would, for example, do more tests, enlarge the audit sample, and if it is really significant, probably you also need to adjust your audit strategy, etc. But for different areas, for the specific areas, specific assertions, actually, so we do have some standardized audit test procedures. That's what we should know. And in the textbook, in auditing standards, actually they have listed all of them. So you can memorize them. Otherwise, you can refer to them when you are doing your own audit. On the other hand, so in specific areas, there are a lot of emphasized audit tests. For example, and if we are auditing accounts receivable, so usually, unless you have very, very special excuses, otherwise you couldn't skip external confirmation, right? For example, if you are auditing inventory, unless you do have some special excuses, otherwise you couldn't skip the stock take. For cash, so the company should do the bank reconciliations and auditors shouldn't skip review the bank reconciliations. Okay, so pretty much that's what we have got from the last few weeks. Any questions so far?
No.
Okay. So now this week, we are first talk about the purchase cycle, auditing the purchase. So if auditing is really new to you, or if business or accounting is still very new to you, you can imagine a very, very small company in certain industry who is doing the purchase, who has a lot of purchase transactions involved in their operation and management, okay? So if we are looking at the purchase cycle, record what we learned from last week. We learned the sales cycle. Can we say the purchase cycle is just a mirror of the sales cycle? So what could be very similar and what could be very, very different? That's what we need to know upfront in this lecture. So in the purchase cycle, there are few important accounts. Just try to move to make the slides bigger for me. Okay. So if you look at the transaction clauses side, so it seems the purchase cycle involves purchase transaction, payment transaction, and also in some special situations, purchase return could also be a case, right? And then if we look the account balance side, the right-hand side of this page. So if the company is doing purchase, what are the accounting transactions, accounting treatments for this? So basically, you purchase something, so that is, I guess, that is debit. Which account?
Inventory.
Okay, inventory. So maybe not just inventory, because your purchase cycle could be purchasing inventory, could be purchasing expenses, the services, could be purchasing even for the PPEs, etc. Right? So here in this part, we don't really just refer to purchasing inventory, but of course, purchasing inventory is a major part of purchase cycle. Okay, so, and what is the other side?
Accounts payable.
So accounts payable, okay. And then, so in the next step, when you are doing the payment, could you also record the accounting transactions? The accounting treatment, sorry. So likely you're going to disperse the
credit cash, debit, accounts payable.
So debit, accounts payable, credit cash. And what about if there are some special cases of purchase returns?
Debit, accounts payable. Yeah, debit, account payable, credit, purchase return.
So you return the also debit accounts payable. Okay, so or maybe debit cash and credit accounts payable. And also, so to credit purchase and credit cash, the debit cash, right? So in the purchase cycle, there are also different departments involved, and also in different departments. So if we look at the procedures, what are the necessary controls? And what are the important documents? And also in relation to what we mentioned about the accounting treatments, at what time point, those accounting treatments will be recorded. For example, when we are doing requisition and ordering, are there any important controls?
Approval of a purchase requisition and a purchase order.
So purchase order, purchase requisition. So in this part, I guess, and so segregation of duties would be very important, right? For example, requisition order ideally shouldn't be done by the same department. So we have production department to do the requisition and the purchasing department specialized in ordering. And also the other important control here is authorization. So only the authorized person can do the ordering, can confirm the requisition. So actually these are quite important because, so for each business cycle, what we need to know is what are the important controls, and then build upon that, you can identify what are the necessary test of control procedures. Okay. So at this point, for ordering, are there any accounting treatment here?
No.
No. Okay. So in the second line, the second column, so for the receiving department, so it seems so you submit the order and then you receive the goods from your supplier. So in the receiving department, so what are the important controls?
Separation of duties between the receiving or the shipping department, receiving department, and the inventory warehouse.
Mm-hmm. So segregation of duty is still very important here, especially important in this line. And also authorization, I guess, will also be very, very important, because in this part, you are dealing with the physical items of inventory. You are also dealing with payable accounts, dealing with money. So both sides are quite important for the company. So authorization is very important. Any other important controls in this step? So in this step, actually, you have now accumulated a few important documents. Is that right? So how would you ensure those documents are consistent with each other?
Suppose you triple check the receiving report to the invoice to the purchase order.
So inspection of those important documents would be important, and also your check should be about the price, quantity, details, quality, etc. Right? And also, so when we are talking about the sales cycle, we talk about the recognition of sales is very important. The timing is very important, right? So when you are dealing with purchase, do you also think the timing is very important regarding in relation to our recognition of the sale of the purchases? And what is the accounting requirements in recognizing the purchase? So at what time you can you can recognize this purchase?
On receival of the invoice goods.
So receiving the so once the supplier issues you the invoice, depending on the trading condition, likely you can recognize the purchase. And then after you receive the goods, actually you confirm this purchase. So it seems adding a bit complexity in the purchase cycle, right? So sometimes you recognize the purchase first, but after that, there's some problem in receiving the goods, and then you should actually adjust your accounting transactions. Okay, so in this line, then what are the important documents here for receiving and payables?
The receiving report and the supplier invoice.
Receiving report, receiving notes, supplier invoices, and together with the purchase order requisition from previous step, right? Okay, so now let's move on to the payable part, and actually you are going to do the payment. So for the payment, what are the important controls?
The purchase order, the receiving report, and the supplier invoice for pricing.
So based on the previous collected, the vouchers, actually you are going to, and also based on your accounts payable records, you are going to disperse the supplier. So in this part, what are the important documents like the remittance, evidence, checks, or the electronic transfer evidence, etc. Those are the important documents you should keep. And also in this payment process, so authorization would still be a very important control. And the cash management and also the remittance management would also be important in managing the company's cash flow. Okay. So, okay, so those are what we talked about previously in our discussion. So a lot of important documents and records are involved in the process. So important documents would include the purchase requisition, order, receiving report, the vendor invoices, and the voucher. And we are going to talk about voucher in more details. And also accounting journals like register, voucher register, and purchase journals. And also in the subsidiary ledger, we are going to do a good accounting for accounts payable ledger. And for the vendors, frequently we are going to prepare their statements, so the vendors' information, individual vendors' information should be on file. And for the payment, of course, check or the electronic transfer would also be in our file on the record. Cash management is also part of the process. So when we are talking about the procedures previously, and also when we look at those important documents, would you notice actually we talk about voucher? So what is voucher? Actually, in the purchase cycle, we emphasize a voucher system. The voucher system is a type of expenditure accounting system. And it is designed to improve control over disbursement by establishing a sequential pre-numbered record of those important purchase documents. Why do we need to emphasize this voucher system? It is because in the purchase cycle, the central documents will be the supplier's invoice. So imagine, so if you are the owner of this company, so the invoice from different suppliers will be in different forms, in different numbers. So it will be very hard for you to put them in the right order and also to check if there's any duplicate or missing ones, right? So what we are going to do is for each of our purchase transaction, we set up our own voucher system. For each transaction, you do have a unique pre-numbered record, pre-numbered voucher file, including the requisition, including the order, including the invoices, including the shipping notes, receiving notes, etc. So you are using your self-created pre-numbered records of purchases to ensure the completeness and also the occurrence of all the transactions recorded. Does it make sense? So for purchase cycle, because suppliers' invoices are not in our order, so we usually need to create our own pre-numbered list of purchase records. We call this as a voucher system. Okay, and voucher system is very important for the control of purchases. Any question? And as we have discussed, actually, still segregation of duties would be very, very important in the purchase cycle. So basically, so purchase, invoicing, the cash payment, and also the accounting should be separate. So to avoid potential conflicts duties. So in the purchase cycle, one of the auditor's concern is, so for the purchase, it is the expenditure to create expense or to create a liability, because we know expense will be consumed in the current year, but liability might be consumed in the future, a few years in the future, right? So when you purchase something, so how would you differentiate? Is this expense or liability? Likely, for example, you are purchasing a desktop. You are purchasing the mobile phone for work usage, for work purpose. So are you going to record this one as a expense or not? So because it's small amount, it is also likely to be consumed in 1 year. So it's very likely you record this one as expense. But if the company do have a different accounting policy, you may also record this one as an assets, right? And also, let's say, okay, so we are purchasing some inventory, and in our contract to the supplier, we promise to pay the supplier in 18 months. So in this way, are we creating a liability, or are we creating a long-term liability or short-term liability?
Long-term liability.
Okay, so it's likely, so for the purchase cycle, there will be a lot of decision making regarding, are you going to, for the purchase item, are you going to put that one as expense or assets? And also in terms of the payment terms, are we going to record this one as a long-term or short-term liability, etc.? So the consideration about liability, expenses, assets will be also very important in the purchase considerations. So in the expenditure cycle, so all the transactions and events are initiated when the entity acquires assets or use services for cash or credit. So this cycle is often separate into a number of subcycles, reflecting the various type of services and assets that could be acquired. So for us as an auditor, we also need to pay attention to what they really purchase. For example, if the company now is purchasing the PPE, what are the likely affected accounts? So in this purchase, we have the increase in the PPEs, and on the other side, because if purchasing PPEs, often finance is involved, so probably short-term or more likely long-term liabilities will also be involved, right? In terms of inventory, so maybe short-term liabilities and also short-term, the current assets will be adjusted, will be changed. What about the normal administrative expenses? So they will be consumed in the year, so it will be consumed as short-term liabilities and also expense in the income statement. And in the purchase, sometimes purchase is not just about physical items, it could be about human resource. So for example, for the payroll cost, it's also in relation to purchase. So what about you, the companies purchasing the payroll cost? So it's like if the human resources are relevant to the production process, so those costs will be included in the cost of goods sold, right? But if those human resources are not relevant to the direct production side, they might be recorded as the administrative expenses. So here what we want to say is, so for purchase, in terms of different types of different items you purchase, the accounting consideration could also be very different. So you should focus on the type of the purchase transactions. And also the classification issue would also be a big concern for the company and also for the auditor. So, so apparently purchase is the mirror of the sales cycle, but it's not always the same. So what has been very, very different if we compare the sales and also the purchase? So we list something here, but here I just want to emphasize the third point, concurrent testing of disbursement and acquisition. So once you receive the goods, once you recognize the purchase transaction, actually a normal company, here we talk about a normal company will commit to pay the supplier, right? So at the point they recognize the purchase, and at the time they commit to create the payable to the supplier. So at this time point, we are going to do the concurrent test of disbursement and acquisition. So this time is very important, and also all the accounting tests and auditing tests at this time point would also be very, very important. And as you are the controller, you do have the control for the payment to suppliers. So once this disbursement, this payable has been created, it's not very likely you are going to change that in the future, right? So once you commit to pay, yearly you will pay. It's not like sales. Once the customer commit to pay you, sometimes they may not pay you. So it's very different. So for payables, you don't need to consider the provisions, right? And also, so for accounts payable and accounts receivable in the sales and purchase cycle, when we talk about the sales cycle, we often worry about overstatement of sales, overstatement of accounts receivable. So in comparison, for accounts payables, we worry about understatement of accounts payable and incomplete record of purchases. Okay. So in the purchase cycle, what are the fundamental inherent risks we should consider? So for different industry, the industry-specific inherent risk will be very different. For example, in Australia, we have a lot of resource-related companies. So in those resource companies, what they purchase would usually of huge amount, huge value. And for the PPE items, so that might be tailor-made. So in this kind of purchase, actually there will be great purchase risk. Are they going to purchase the good quality PPEs? Are they going to get the timely receipts of those purchase items? Would be very, very important for this type of company. And also consider, for example, IT industry. So in IT industry, what are the typical purchases? In IT industry, probably they want to invest a lot in intangible assets and a lot of investment in human resources, right? So all of them are not very tangible. And also the value could change quite easily. The other very typical industry, for example, in Queensland, the tourism industry. So what has been different in their inherent risk? So for tourism industry, so their sales, their revenue, and also their purchases tends to be very, very seasonal. So one thing is so it's often related to the going concern issue, and in particular about purchases. So actually for the auditor, it wouldn't be very hard for you to identify if the trend of purchase is not consistent with this business mode, right? So here what I mean is for different type of industries, the inherent risk consideration could be also very, very different. When we're talking about inherent risk in purchase cycle, we also want to emphasize the accounts payable account. If you go to the balance sheet, you could find accounts payable will have different columns, will have different blocks. We usually have trade payables. We may also have other payables. We could have short-term payables. You could also have long-term payables. So the classification of those accounts payables and also matching different types of payables with different purchase transaction is also one of the key concerns for the auditors. And as we mentioned before, so for the purchase cycle, completeness is usually the primary assertion at risk because we worry about unrecorded liabilities. We worry about purchase might not be completely recorded because the management usually have the incentive to understate the expenses, understate the liabilities. So we would talk about those assertions later on. And of course, from prior audits, working documents, you could easily inherit it, what has been wrong in this company previously. So those previously occurred problems, risks, would usually also repeated in this year. So you borrowed a lot of inherent risk documented in prior years audit working paper. So in the purchase cycle, especially for the cash disbursement area, and actually it's not just about cash disbursement, it would be also extended to the initial, the purchase. So what are those typical fraud or irregularities? So let's have a look at this. So first, the classic disbursement fraud. For example, so the payable is paid to a ghost creditor or to a wrong creditor could be an issue for all types of cash disbursements in the purchase cycle. And of course, kickback is also a concern for the managers and also for the auditors. So the purchasing staff could, the personnel who's responsible for the purchase could get a formal arrangement with supplier, but in the side contract, they may receive illegal commissions from the supplier for what they purchase on behalf of the company. And kickback is not just the misstatement problem there, and because it's relevant to the company's interest, is also a fraudulent activity. And when auditors audit the purchase cycle, they should also consider, are there any illegal purchases? So the purchase item should be legal and shouldn't be illegal. For example, bribery is not allowed. If you notice there is a payment or purchase item which is relevant to the bribery, maybe you need to report, use the whistleblowing channel. And also, so what they purchase for the company is for the normal operation of the company as a separate legal entity, legal person. So the purchase by this company shouldn't be used for the personal use of the management. If the money paid, the item purchase is used for unauthorized personal use of the managers, then that is called executive tax. And the executive perks are unauthorized and also fraudulent activity as well. The other thing we mentioned, similar to what we noticed in the sales cycle, that is kiting. So in sales cycle, so you have sales, and by using kiting, actually you receive the money. So the staff, not you. So the staff member received the money, but not put that into recording. They postpone the cash receipts one by one. Therefore, they could commit fraud. And in the purchase cycle, the personnel can also commit fraud by kiting. That is to postpone the cash payment one by one. Therefore, to commit fraud, to put the money into their own pockets or inflate the cash balance. So those items, those points are the very, very typical potential misstatement in the purchase cycle. And then let's have a look of the control and also the test of control. So as we mentioned, so actually, so in the purchase cycle, a lot of conventional standardized control in the control cycle and also in different industries. But for different entities based on your preliminary understanding to the company and also to the purchase business cycle, you may notice some special risks embedded in this entity that also need to be included in your control risk assessment. So for overall control risk, you have already identified. When you design your test controls, you should, when you do your risk assessment and also when you design your test controls, you should focus on first, are the conventional controls in place or not? In terms of specially identified risks, do they also have additional controls in place? For all the identified controls, do they have a good control policy? And then if they do have the control policy, do they implement those control properly in the company? And also, do they have sufficient evidence for that? Right? And also, in terms of those control risks, so what are the key control points? And then, based on those control points, you can design your control test. Okay. So for example, here, we look at the test controls and the party's assertion and also possible misstatement. So for the occurrence, in the occurrence for the purchase cycle, what are the key control points? So for the occurrence assertion in the purchase, we want to make sure all the purchase transactions actually occurred and also actually ordered, received, authorized with the right item. Is that right? So if you are able to identify those key control points, so when you check the test control, when you do the test control for this occurrence assertion, what you could do is to test the ordering, receiving documents, authorization evidence, and also checking details for matching, for the matching details. When you check the occurrence assertion for the cash disbursement, so you are going to match the items, match the payment with the voucher, with those previous mentioned documents, and also further match that with the bank records. And of course, you are also doing the bank reconciliation for all the cash disbursement activities. If we are talking about completeness assertion, what are the key controls here? And how would you design the test controls? So for completeness in purchase, we want to ensure, so all the purchase has been recorded in the purchase accounts, in the inventory accounts, and also the relevant payment would also be completely recorded. So if we are looking at this completeness assertion, so what are the important test controls? Hello? So if we are testing the completeness assertion for purchase, what are the very important control points, and then how would you design the test controls here? Completeness means we want all the transactions included, recorded. And as we mentioned before, for the purchase cycle, the central documents, the invoice, is not initially pre-numbered. So we need to create our own voucher system. So when you check, when you test the completeness assertion, we want to ensure the company do have this voucher system properly properly available there. So that means the important documents are pre-numbered and also should be sequentially accounted for. So when you are doing your test, you first check the availability of the vouching system. And also you check the key documents are pre-numbered, and also you check the accounting for the sequentially accounting for results. What are the other typical test controls for the completeness assertions? You may also want to get evidence from the subsequent payment. So because the subsequent payment would indicate the occurrence of those relevant payments would indicate the completeness of the purchase and payables. What could be the additional test controls also for the completeness assertions? Hi, excuse me, are you still following? So for completeness assertion, first we look at the voucher system. Second, we need to test the pre-numbered and sequentially accounted for results. Third, you need to look at the sequential payment because it also indicates the completeness of purchases and payables. And what is the fourth one? Fourth one, you should also look at the cutoff test results because cutoff is in relation to both occurrence and completeness assertions. And also, if we are looking at the completeness of cash payment, cash disbursement, you should also follow up the daily cash posting and also the monthly bank reconciliation procedures. Okay? Hello? Okay, accuracy. Remember here we are talking about purchase and cash disbursement together. Okay? So here what we discuss actually covers this page, this page, this page, and also including the cash disbursement one. So I leave those pages for your read of the class, but here I want to discuss those possible designs of test controls with you together. Okay, accuracy. So accuracy means when the accountants record the purchase and also cash payment transactions, the details should be accurate, especially the value should be accurate enough, right? So in relation to this accuracy assertion, what are the important control points?
The pricing in the purchase order to the invoice.
So price and also amount, maybe the items in the purchase order and also in different documents should match with each other and also should be correctly calculated. Therefore, for the accuracy assertion, what should be the test of control points? So how would you design your test controls? So in your test control, you are going to test the price, the consistency of the price in different important vouchers.
I suppose you test the price of contracts. So you might get contracts to see what prices are, and then obviously look at purchase orders to make sure that that pricing is coming through to purchase orders, and then see that I suppose that you're controlling payments that have those prices on the invoices, and that you're not approving invoices that have prices different to the contract value.
Okay, so that's about individual purchase transaction. What about the total overall purchase transactions? So you are going to do the calculation. You are going to check the calculation should also be correct. For example, the sum of the total of the calculation should also be correct, be accurate. And also in terms of accuracy assertion. So remember when we're talking about the sales, we talk about, okay, so there should be evidence of detailed check. For example, checking the physical items, checking the receiving documents, and also the stamp of check, the signal, the checking should also be signed on the documents, right? So in the test control, you should also cite the evidence of the authorized person who have already checked those details as well. Okay. And then the next one, cutoff. So in terms of cutoff, as we mentioned before, so cutoff basically involves 1 or 2 weeks before and after the balance sheet date. So cutoff is about purchase and also is about sales. It's about cash receipts and also about cash payment. So when you prepare the cutoff test, usually you will do sales cutoff test, purchase cutoff test, cash receipts cutoff test, and also cash payment cutoff test around those 2 or 4 weeks. And cutoff test will be very, very important for the sales cycle and the purchase cycle. And in our later talk about inventory, we also have the cutoff test maybe for in relation to inventory as well. Classification. Classification, so in the classification assertion for the purchase cycle, it is very important for us to realize the purchased items might be about short-term assets, long-term assets, might be relevant to short-term liabilities or long-term liabilities, might be about expenses or could be capitalized as expenditure, right? So those variations in the transaction create a lot of issues in the classification. So the classification assertion should also be watched out by the auditor. And presentation, this one will be simple. So disclosure should be complying with the standards and regulations. Therefore, for the test controls, so we have a few typical tests. In terms of segregation duties, we usually do observation. In terms of authorization and approval test, we usually could get the evidence from the sample tests. In terms of the matching with supporting documents, we could do the inspection in relation to those vouchers, those important documents in the voucher system. For the key controls in terms of numerical sequence, what we usually do is first you need to review the documents are in the numerical order. Second, you need to review the company has already done the accounting for procedures for those numerical sequence. For if your control is focused on the mathematical check, so you should check individual one and also recalculate the sum ups. And for the cash disbursement, often you need to look at the cash daily posting and also look at the proper bank reconciliations. And classification is important. So right transaction and right account should be accounted in. Okay, so here this page seems to be very simple, but actually, so for different purpose of controls, then there will be a matching test of control procedures for you to use. So if you can link them naturally, so it wouldn't be very hard for you to design a test control. Okay. Okay. And we also want to emphasize the control of and also test control regarding the purchase returns. So consider, and when you are dealing with the purchase transactions, so actually purchase return wouldn't be a very, very big concern for the company and also for the auditors, right? Because yearly, this account purchase return might not be a very big account for any type of the business. But on the other hand, if in one company, you actually realize they do have a very big purchase return, and then what will be the implication? For normal companies, they usually do not have a big purchase return. But if they do have a lot of purchase returns, then you should naturally be alert about the cash received in relation to these purchase returns. Do they have a good control of those credits or cash received in relation to these returns? And also, what happened, what's wrong with their purchase cycle? Because they have a lot of, usually when they purchase, that should be scientifically organized. So if they purchase something they don't need, they also must indicate something wrong with their purchase operation, right? So purchase return usually wouldn't be significant, usually wouldn't be material. But once it is significant, then actually that would cause your big concern about the company's operation, and also you want to further follow up the cash management and the purchase management. Okay, so literally, if we have done the test controls, we are going to confirm or revise the audit strategy. So once the audit strategy has been confirmed or revised, we can further go to the substantive test. Also, we know a lot of substantive tests have already been done together with the test controls. So here, the remaining part of the substantive test we want to cover will predominantly mostly about those balances, account balances, right? So in the substantive test, remember we have different types like substantive analytic procedure, substantive test of transactions, and also substantive test of account balances. So first, let's have a look at the analytical procedures. So in the analytical procedures, there might be a few things we may highlight. First, that is payable turnover. If you convert the equation, that will be days outstanding, payable days outstanding, right? Those payable turnover actually indicates how quickly the company paid their payables. And why we, as an auditor, why we also need to analyze the payable turnovers. So if the company has a very long payable turnover, it may indicate the company do not have a good cash position. They may have difficulties to pay, right? The other thing is, if the company compared to their peers or compared to their history, if they do have very long payable turnover, it may also indicate, so probably they get poor credit policy. They get unreasonable credit policy from their suppliers. So the payable turnover should be individually analyzed. The other focus, that will be the payable balance. So when you look at the payable balance as a total, the changes, the deviations would also indicate the changes in the supplier or the cash positions. And in particular, for the payable balance, you shouldn't just look at the total payable balance by the end of the year for this company. What you should do is you should also look at per supplier, per clauses. Here we mean per classes, for example, payables on PPEs, payables on these categories of expenses, payables on this type of payroll. So the analysis should be detailed into clauses rather than just looking at the total amount. The other thing, as we mentioned, you should also analyze the purchase returns, because sometimes purchase returns would also indicate the very special, the very outstanding purchase returns may indicate operational inefficiency or the problems in the company's quality control. Okay. So in terms of detailed test of details of transactions, account balances, and disclosure, we just need to emphasize a few of important testing procedures. For example, what are the typical test of details for completeness assertion? When we are doing the testing for complete assertion, what we vary is unrecorded liabilities, right? So here, the key is search for unrecorded liabilities. There will be a few procedures, a few tests you usually need to follow. First, you need to ask the management about the control activities and also ask, do you have unrecorded liabilities or not? Usually management will say, no, we record everything, right? Then you should do an inspecting procedure. That is to do the tracing, trace the items from the purchase journal and then to the cash disbursement journal. In this way, you are trying to ensure all the purchase items are finally paid. So all the purchase transactions are finally recorded, are recorded and finally paid. In this tracing procedure, you should have some special test about very large purchases, large dollar items, large dollar payables and payment. Third one, so you should also look out the subsequent payment, because the subsequent payment will also indicate the previous purchases. So if you have the subsequent payment, then, but you couldn't find the matching purchase account, this would also indicate incompleteness, incomplete accounting record, right? And the fourth one here is about those unmatched vouchers. So when you are doing your inspection of the sample, if you find some important vouchers are not matched with each other, so you should be alert enough to about unrecorded purchases. So those are the four basic tools to search for unrecorded liabilities. In accounts payables, sometimes we could also use confirmation, but confirmation is not the compulsory, not like confirmation in accounts receivables, which is almost compulsory, but for accounts payables, confirmation could be used. It's still a good way to obtain the evidence of accounts payable, but it's not compulsory. Okay. And when you get evidence for existence of the purchase and also the payables, so vouching would be the right procedure we are going to follow. So compared to tracing, which is from the beginning step to the later step, vouching is likely the backwards. So you start from the payables to the final payment, and then going back to the initial supporting documents in the voucher system. Cutoff. So as we mentioned a lot of times, so for purchase, sales, cash payment, cash receipts, cutoff is always important and always necessary. So cutoff test is not skippable in the auditing test, okay? Rights obligation. So in the purchase cycle, we usually don't really think too much about the rights and obligation issue. So this assertion usually wouldn't be the assertion at risk. Valuation. Because for the purchase, so the amount has been very determined there. So has been fixed there. So this risk is also relatively easy. So this risk is not a very big concern for us. But classification is important. And in terms of the presentation disclosure, so you need to make sure the disclosure is in compliance with the accounting standards, including the balance sheet items, also including the notes items. Okay. So probably here we also want to emphasize. So in purchase, there are some special purchase transactions, purchase contracts. For the auditors, you should also always pay attention to. First is the long-term purchase contracts. So long-term purchase contracts usually tend to be more complex. So a lot of many items, many clauses inside. So sometimes it could embed a lot of hidden conditions in this contract, and misstatement or fraud could exist there. So long-term purchase contracts, if you notice there are long-term ones, at least in your first year of audit, you should have a good look at that. The other special area will be related parties. So related party transactions should be paid special attention for sales and also for purchases. And because the purchase is about different clauses, different accounts, so, and also the purchase in different segments would also be different. So the segment reporting for different purchases and also the cost should also be further reviewed by the auditor as a part of your purchase audit. Okay, so that is our talks about the auditing the purchase cycle. Any questions, please?
No.
Okay, so I'm going to quit the meeting and then come in. Then we are going to talk about auditing the inventory.